Hey everyone, in this video I'm going to bring you one excellent artificial intelligence stock that I think you can buy heading into 2024 and hold it for many years. Now I'm going to discuss the total addressable market for artificial intelligence. I'm going to discuss the profitability, the cash flow, the revenue growth of this particular company and weigh that against its valuation as my reasons why I think it's an excellent stock to buy for 2024.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So I mentioned I would talk about the total addressable market for artificial intelligence. According to Statista, the total addressable market for artificial intelligence is expected to grow to $1.85 trillion by the year 2030. That would be up significantly from the $207.9 billion in 2023. Artificial intelligence is popularized by large language models like ChatGPT, but there are more applications like driverless car technology, recommender systems, and more. The companies that stand to benefit from the growth in this AI surge is companies like Amazon, Nvidia, Alphabet, Microsoft, and more. Investors getting in today could realize exponential returns from investments that capitalize on the growing effectiveness of artificial intelligence. That being said, you can see the stock that I'm talking about in this video, Taiwan Semiconductor Manufacturing, has already benefited from the growth in several other markets and now stands to benefit from the growth in AI, supplying some of the main companies in the AI market with semiconductor technology. Taiwan Semiconductor Manufacturing has grown revenue to $69.64 billion. That was up from around $20 billion in 2014. And if the total addressable market estimates for AI are true, then TSM stands to benefit continuously for the next decade from the growth in that trend. Additionally, TSM has demonstrated economies in scale. Economies in scale is one of the most desirable characteristics you can find in an investment. In the example I have created here, sales grow from $100 in year 1 to $115.76 in year 4, while net income more than doubles from $4.50 to $9.47 in year 4. This company demonstrates economies in scale. As its revenue grows, its profits grow by a larger magnitude. Not every company can achieve this kind of effective growth. Here's how it works. This is a typical categorization of an income statement of a publicly traded company. Cost of goods sold is what's called a variable expense. That means cost of goods sold is connected to sales. Other expenses like interest, general and admin, and depreciation are not connected to sales. You can see here depreciation stays the same at 25 whether sales increase or not. The same is true for interest expense. It stays the same whether sales grows or not. You can understand your interest payments do not increase when your sales increase. Overall, businesses typically have a mixture of fixed expenses that are unrelated to sales and variable expenses that are. When sales increase, the business leverages those fixed expenses as we see in this example, and profits grow by a larger magnitude than the increase in sales. That being said, you can see TSM's operating profit margin has risen to 45.62%, up from a little less than 36% in 2014. That's demonstrating growth in profitability as revenue grows. Now, this type of elevated operating profitability is perhaps the higher end of where TSM could achieve. I'm not so certain it can go much higher than a 45% operating profit margin. Remember, as I often say, the highest operating profit margin of any of the companies that I follow is Visa, and that's at 67%. And Visa is not a capital intensive business as Taiwan Semiconductor is. So this might be towards the higher end of TSM's profit margin expansion, but who knows? If the market grows as it's expected and TSM continues to get better at what it does, its operating profit margin could continue rising closer to 50-55% perhaps over the next few years. TSM has also done an excellent job increasing its cash flow from operations to sales. You could see that margin at 63.15%. That means out of every $100 in sales, $63 turns into cash. That's a good conversion rate for a business the size of TSM. It's on the higher end of any of the companies that I follow as well. So TSM, not only is it growing revenue, but it's growing revenue lucratively. Let's look at what expectations are for TSM over the next 2 years. So 2023 was a difficult year for TSM. What I have here is its revenue decrease of 10% and earnings per share decrease of 20% in 2023. This was due to the buildup in inventory that happened as a result of the shortages during the pandemic. And so there was a bit of an up and down cycle. But analysts expect TSM to rebound strongly over the next 2 years with 19.5% revenue growth expected in 2024. That will drive 16.5% earnings per share growth, and then 21.3% revenue growth in 2025. That will drive earnings per share growth of 29.9% in 2025. So Taiwan Semiconductor is expected to generate strong growth and strong growth in the rate of growth, that second derivative that I often optimize for in my investment decisions. You can see Taiwan Semiconductor revenue growing from 19 to 21 and earnings per share growing from 16 to 30. So not only are they growing robustly, but the rate of growth is increasing robustly. And that's evidence that analysts expect TSM to benefit from that rising tailwind, the rising market that it operates in. And that's good news for TSM stock investors. So one risk I will point out for TSM, in addition to its geopolitical risk, which I always mention in every TSM video, the geopolitical tensions between China and Taiwan and the US and that relationship, the strains on that relationship has been a risk for TSM. That's something that I always mention. But in addition to that, TSM's long-term debt has increased from a little less than $4 billion around 2019 all the way up to $29.45 billion in the most recent update. I mentioned already that TSM is a capital-intensive business. It costs billions to build these semiconductor manufacturing facilities, and they constantly need to spend billions more to upgrade, maintain advanced technology, and increase production capacity. And so that requires lots of capital. And one way TSM raises that capital is through long-term debt. Finally, TSM is not trading at an expensive valuation. It's trading at a forward PE of 16.65, which is about the average valuation it has traded for going back the last 3 years. It's been higher, it's been a little bit lower, but right now it's about its average valuation. And I always say it's a good strategy to pay a fair price for an excellent business, and this is an example of that. I feel TSM is trading at a fair price. It's not cheap, but the business is excellent. And so you're getting an excellent business at a fair price, which I think makes an excellent investment in 2024. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.